Hey everybody, Don Snyder here for Priority Home Lending. I'm putting together a short series of videos that each answer an individual question that I've been getting a lot about mortgage lending and finance in our new age of dealing with COVID-19. And so in this video, I want to answer some of the important questions that I've been getting more often than any others, and that refers to mortgage forbearance. So A, is it right for me? B, what does that look like? What options do I have? And C, what happens when I go into forbearance? So let me address those really quickly and hopefully answer your questions. I do want to point out, though, that every scenario is going to be different. This is specific to your particular financial situation, the mortgage that you have, and other variables that we want to keep in mind. So this information is generally applicable, and you want to make sure to talk to your servicer specifically to find out what options are available for you if you're considering forbearance. So let me share my screen here with you as I dig into this information. First of all, I wanted to point out this screen here is Fannie Mae's Know Your Options, and it specifically addresses forbearance. So figure out what type of loan you have first. If you have Fannie Mae or Freddie Mac, FHA, VA, USDA, they've each issued guidance to lenders and servicers on how they recommend dealing with forbearance. Now, it's a great tool to have available in these times of potential financial hardship. And what's even better is that the agencies that are offering this guidance have in many cases really thought through the long-term effects of forbearance, and some have even issued recommendations about changing the way that credit is reported to minimize the long-term financial impact that you would see from forbearance when it really is a situation that's completely out of your control. So first and foremost, go to those government websites for the type of loan that you have, or government or agency websites, and see what guidance they have that's specifically applicable to you. Now, I wanted to dig in a little bit on what happens when we go into forbearance. This is really important. It's a key element, and it's going to, again, vary from one servicer to another, what options they're going to have available for you, and may even depend on your particular circumstances. But the one that I think is really important, I wanted to point out because I'm seeing a lot of my colleagues in the lending industry are seeing being offered right now, is after deferment. So say you take a 3-month deferment. For 90 days, you're not going to pay your mortgage based on your financial hardship. Then they would offer you that deferment with a balloon payment at the end. This can be really difficult. And this is the one that I want everybody to be aware of and to watch out so that they can plan if this is the option that's offered to them. Because under this sort of a deferment agreement, you wouldn't pay your mortgage for those 90 days, but at the end of those 90 days, you'd have 3 months of mortgage payments that are all due at the same time. If you're not aware of this and planning for it, that can create additional financial hardship. And so I just want everybody to understand that that's one of those options that's out there being offered, and that you need to really know whether or not that's going to be right for your financial situation, so that you're prepared to make that balloon payment at the end when your forbearance period has completed. The next one is going to be the repayment plan. And so under this model, what they do is basically increase the amount of your monthly payment after deferment, so that that increase will then make up for those missed payments, and your loan will still terminate, right, or pay off in the designated time period. The amount of that increase, again, is going to be very specific to your situation, and only your servicer can tell you whether this is an option and what that option is going to look like in terms of firm numbers. And then the third option that's typically available is going to be the loan modification. Under this option, say you have 200 months of payments left on your home before you own it outright, before you pay off the mortgage, right? This would mean that now you have, for example, 203 payments to make, because they take the period of deferment and then they modify the duration of the loan, adding it on to the end, so that your monthly payment stays the same you don't have that balloon payment at the end, but you just added to the duration of your mortgage. Now, again, it's important to remember that this option may not be available for everybody. If you have questions about getting more details on these options or thinking through how it affects your financial situation, whether this is right for you, please give me a call. I'm more than happy to help. And while I can't advise you on your finances, I can offer some insights into how each of these options will interact with your finances. So whether you worked with me to get your home loan or whether you worked with somebody else, if you have a question that I can answer, I'm happy to do that. Just give me a phone call or send me an email and we'll talk it through. So hopefully this has been helpful for you. Thank you for your time in watching this, and good luck.